Welcome to Reunite. I'm your host, Ryan Polakaitis, and I'm here with Joe Fairless. Joe is a savvy investor whose background includes transitioning from being the VP of a New York marketing company to real estate investing and controlling $7 million in property within 6 months to now controlling $21 million in property. Today we're going to talk about raising private money for your business. Thanks for being on the show, Joe.
Yeah, nice to meet you, Ryan. Looking forward to our conversation.
Likewise. All right, so just to start off for our listeners who don't know, please explain, the importance of private money.
Well, it's a way to scale your company. It's a way to get financing for deals that either you're are distressed and banks won't touch, or if you're just starting out and you don't have a good balance sheet, meaning you don't have any money, but you've got some resourcefulness and creativity, then it's another way to get into the game and start getting deals. And then the other way is just to scale your business too, because I think that was the key for me. Is with private money, it's limitless, and you're able to do more deals and not have to wait until you've saved up enough to do your next deal.
Right. So just to elaborate a little bit more on that, some people hear the terms private money, hard money, etc. Obviously, it's very basic, but for those that don't know, what's the biggest difference, between hard money and private money?
Well, I guess it depends on how we're defining it, and I'm sure as you mentioned, people define it differently. When I think of hard money, I personally think of a fix and flip, and it's short-term cash for a deal that's provided by a company. When I think of private money, I think of more mid to long term from a private individual, and you're coming up with an agreement between the two of you.
Hmm. Interesting, and I guess everyone's interpretation is different. So, I mean, for me, I'm in the wholesaling and the rehabbing business. Now, for wholesaling, you don't need private money, hard money, 99% of the time. For rehabs, you do need money because, just like you're saying, it's limitless. I mean, even if you have access to $1 million here in New Jersey, that could be two or three deals.
Yep.
You could never have access to too much money. That being said, the difference for me as far as in the rehab business is the cost of the money. Now, with hard money, you're going to have points, you're going to have higher interest rates, whereas with private money, you're going to have cheaper costs, in which case cheaper costs means more profit. So that to me is the biggest difference, is really the cost.
Hmm.
Um, anyway, so transitioning, let's just say you have your rehabbers who are or wholesalers who are aspiring to be rehabbers. When is really the best time to start raising private money?
It's a process, and the best time to start raising private money is when you get started, regardless of if you need it or not, because it is a process. When you go reach out to people, it's likely that it's going to take multiple meetings in order to actually be successful with raising the money. So what I do is I this is very tactical, but I buy apartment communities with investors, and then we share in the profits. So one thing that I've learned to that was helpful in building the list is creating a spreadsheet. And in the spreadsheet, you have different columns, and one column is the person's name, the other column is how you know them, and the other two columns are the range, so low and high range. And what you do is you list out all the people that you know, and within that, you identify where you know them from, and the goal is to have conversations with different people from different networks. And once you meet someone, say, for example, you're on my spreadsheet, and it's like, all right, I know Ryan through podcasting, and Ryan also recommended when I talked to you about a deal I have. You were interested, and you also recommended somebody else. Well, that referral is going to be much more valuable than any other type of reference or way that you'd get a hold of that second person. And so in that spreadsheet, the goal is to connect with one person within each of your networks. And I'm a member of different networks. From I was a captain of a flag football team in New York to I'm on the alumni advisory board for Texas Tech. I have friends in Midland who are all oil and gas. So all of those are different networks. And once I talk to one person from each of those networks, and then when I talk to that person, I say, is there someone, or who should I talk to who in Midland or on the alumni advisory board? And that way I go in, and it's much easier to have the second conversation than it is the first, because you're going in through a referral. And I noticed that firsthand whenever I was raising money for my first deal. I raised over $1 million on my first deal for a apartment community. And my biggest investor actually said, well, if Brandon has already said he's investing in it, then okay, that makes a lot of sense. Go ahead and send it to me, because I know he's really financially responsible with his money. He looked at it in exhaustive detail, but it allowed me, it gave me the credibility, or it gave the deal the credibility that it wouldn't have had if someone else that he knew wasn't in the deal. So that's one very tactical thing, but also practical for everyone to do as they're starting out and having those conversations. And when your original question was, when should they start raising money? Well, everyone might be thinking, well, how do I start raising money if I don't have a deal? Well, simply have a hypothetical deal and show them the type of deals, fix and flips or whatever you're doing, that you have, and then that will be all you need to say, okay, this is what I'm doing. If I find something like this, does this meet your financial goals? At that point, you can have a conversation and start building on that.
Right. And there was a very elaborate response. And I guess the key is you want to start raising the private money before you have a deal, because once you have a deal, it tends to be more difficult. I mean, you may come across as needy, and anyone who comes across as needy immediately scares away private investors.
Absolutely.
So I mean, that's very important. Get the money before you have the deal. And not only that, I guess to kind of elaborate a little bit on a quote unquote hypothetical deal, another option that they could probably do is link up with the investors in their local neighborhood that are experienced, that are doing deals, and they could use those examples of, okay, here's some of the deals that my current associates are working on, here's the types of returns, et cetera, et cetera. Kind of give them an idea instead of just saying, well, here's what we think may happen, or something along the lines of that nature. And obviously you covered what the first step is in raising private money. It sounded like creating a Rolodex of anybody you meet.
Yeah, absolutely. And it's making a concerted effort to become a part of different networks or communities. That's key. Yeah, we were talking before we started recording that I lived in New York City for 10 years, and just this past summer I moved after living in New York for 10 years. And I moved to a city, Cincinnati, that I didn't know a whole lot of people. So what I did is I immediately, I'd been volunteering for Junior Achievement in New York City. So what I did, I immediately got involved with Junior Achievement in Cincinnati, and now I'm on the board for Junior Achievement in Cincinnati. Then I started the mastermind group in Cincinnati, and on Tuesday, it's going to be like the 5th or 6th one I've done, and it's sold out. So, but by the way, the tickets are free. But it's but it's a way to for me to make friends, quite frankly. And I don't think about business as networking or trying to get something out of people. I think about it simply as relationship building and getting to know people, and seeing what I can do to help, and then communicating the challenges I have, and seeing if what opportunities there are for other people to help me. That's it. And one insight from that example for anybody who's raising money or looking to raise money is volunteer. when you volunteer, you're doing something that you is near and dear to your heart. So find a cause that you love and that you want to get behind. If you don't have one already, volunteer, and your goal is to eventually become a board member on for that philanthropic organization. Because when you're a board member, you'll be with other board members who are likely, not a guarantee, but likely executives, well off, have time to allocate towards board meetings, and you're likely going to exponentially expand your ability to raise money just simply by volunteering for something that you're passionate about. And you're connecting with them on a non-business level, which is also the key when you're building relationships.
Right. Very interesting. I must say I did a lot of reading on raising private money, and that's probably the first time I personally have heard that, and I think it's very interesting. It makes a lot of sense. Um, so I mean, as far as raising private money, you have, it sounds like anyone potentially could be a prospect. And then if you have, okay, I'm going to do a little more laser focused volunteering, which again is something that I've never heard before and is very something that I think I may implement myself. What would be some other resources if you said you were going to take, kind of like instead of a shotgun approach, more of a laser focus approach? Say, okay, I'm going to go and I'm going to start raising private money today for the sole intent of raising money for this apartment building or whatever it may be. What are some other resources or avenues that an investor may go to find these potential private investors?
Yeah, well, talked about two. One is become a member of different networks in your community. Two is volunteer. Three is create a platform for yourself. Similar to what you're doing with your podcast, similar to what I'm doing with my podcast. It's important to create a platform so that others can learn more about you outside of your one-on-one conversations with them. Because the first thing everybody does whenever you get introduced to them through email or through a friend and they haven't met you in person yet is they Google you. Right? Like they
100%.
They type it in and they Google you. Well, what's going to come up when people Google you? Will it be just some static website? Will it be will it be nothing?
Mm-hmm.
Or will it be blog posts or interviews or YouTube videos where they can see you, they get a feel for who you are, and they're able to magically build a relationship with you without you physically being present.
Right.
That's it, everybody wants to get serious about raising money, then you've got to build a platform. And how you build a platform is first you identify what you enjoy. For me, it's not blog posts. It takes way too long for me to write a blog post for the amount of return I get on it, and I just don't enjoy it that much. It's incredibly accomplishing feeling once I get it done, but it just takes too long. So for me, I like having conversations, and that's why I have a daily podcast. It's a daily podcast for the last year and a half. One episode a day. It's interview format, so I'm meeting people on a daily basis,
Right.
and I enjoy that. For others, it might be YouTube, where you do videos and it's just, hey, this is my fix and flip. I'm going to document every day, regardless of what I got going on, and I'm going to just document what I've got, what I'm, the progress that I'm making. Just that that small series could be incredibly effective when you're both reaching out to people because they can search for you and they can see that, or whenever you're showing people what you've done before as a case study.
Right. And actually, it's funny you mentioned that. I mean, building trust is big, and that relates directly to it was a 9-hour audiobook I listened to called The Impact Equation, which it says exactly what you had mentioned. I mean, people want to do business with those who trust, and for anyone out of my listeners, definitely worthwhile. So diving in a little bit more, let's just say you have those prospects, they showed some interest. What's the next step? Obviously, everyone has a different approach? Some people set up an elaborate meeting, presentation, etc. What's your approach? I mean, let's say someone says, "Okay, Joe, I'm interested. I want to hear more."
Well, if I don't have a deal, then it's more of a stay in touch on a monthly basis, and let them know about the different deals I've been looking at and have disqualified. That way, when I do send them something, they act on it quickly because they know how selective I've been. If I do have a deal, then it's a different story. Then we talk. Then we simply talk about the specifics. I've raised $1 million for my first deal and over $1 million for my second deal, a 250 unit. And out of all of those deals, in total, there are 24 investors. Well, there's some overlap, but 24 partners in total. Some of them overlap, 2 or 3 overlap. I've probably had 3 in-person conversations. The rest have been over the phone. Because the high net worth individuals who have money, they evaluate the deals very, very well, but they might not have the time to meet with you, or you might not be in the same city as them. So yeah, I would simply have a conversation with them about the opportunity. Now, one tip I have. And I learned this from Bob Berg, who is the author of The Go-Giver. I've had him on my podcast a couple times. A great book. He says, when you meet with someone for the first time, regardless in this scenario, if they say, yes, I'm interested, and you have a deal, or if they say, no, not right now, that's fine too. Regardless, if you want to stay in touch with them, ask them this question. Say, how would I know if I come across someone, if they'd be a good fit to introduce you to? And what that does is you immediately identify who they're looking to be introduced to, and you get a good sense of where their focus is. And then simply find someone or someones to introduce them to who fit that mold. That's a great way of really easily and inexpensively, it's free, to stay in touch in a relevant way and continue to add value to people, and be methodical about it. Keep a database and mark off when you do that.
Right. So you're saying when you meet with these people to find out where their interest lies, and then by you giving without accepting something in return, in essence, kind of builds that relationship further.
Absolutely.
Excellent.
And it's I found, and I'm guilty of this, I suspect that makes sense to a lot of people. But the difference between a lot of people and the people who really succeed are the ones who are consistent and methodical about it. Because I suspect everybody thinks that's a good idea. You should. It's a good idea. But the difference is some of us who will think about it and do it on a sporadic basis, and others who will methodically document in a spreadsheet, these are the 10, 20 people I want to stay in touch with. These are the people they've told me they want to be introduced to. It's not a specific person, it's a type of person. And then these are the people who I've introduced them to as a result of that, and staying methodical about it. That's what really separates you, is the consistency of taking these little actions.
Right. Now, what about the people, let's say that, you have your Rolodex of potential interested parties, and you've been keeping in contact with them, and they just never pulled the trigger. It's been, let's say, a year and a half. They stay in contact with you, but they just never pulled the trigger. What's your, approach at that point? Do you further the conversation to say, hey, we've been in contact for a year or so. I want to see how I could better suit your needs. I mean, how do you further try to, cultivate that relationship?
Yeah, I'd simply ask them, what are their goals? What are their financial goals? If it's someone who I'm looking to have as a private lender or private investor, then I'd say, what are your financial goals? And they'd say, my goals are, at least 10% cash on cash return. Or I have gyms that I own, and I make 12% on those gyms every time I open a new one, so I want to make more than that. Or I want to be the stock market at whatever. 8%. Well, at that point, once I know their goals, then I talk to them about what I got going on, and I simply ask them, if I find something that meets your financial goals of XYZ, would you like me to share it with you?
Mm-hmm.
And they say yes, sure. They always do. Everybody
Right.
says yes. And if I've gone through that exercise and I've shared it with them, then I simply ask them, what's the deal? Is it either have I not explained it well enough, or is now not the right time for you? It's one of those two things, because
Right.
this meets your goals.
Mm-hmm.
So is it either A or B? Me not giving you the right information, or not the right time for you?
Right. Or just maybe that they have cold feet and it just doesn't meet their needs. I mean,
Well, but
you know,
then it wouldn't reach their goals. But we've
right.
already established that it reaches their goals. So it's either A, not I'm not explaining it properly, or B, it's not the right time, meaning they don't have the money to invest.
Right. Right. Or, well, I was alluding to some people, maybe you're just very nice and they don't want to tell you no. That could be a smaller percentage. Um, so, okay, now we have obviously our listeners, and there's been a lot of great information. One of the things though is that you can't just go out there and start advertising for money. If you meet somebody for the first time, even if you had a 2-hour conversation with them, it didn't start off business, but towards the end of the conversation, coffee break, whatever it may be, it starts leaning that direction. There is certain rules and guidelines that you have to go by before you could start trying to raise money from that person. What are those guidelines?
Yeah, you got to be an accredited investor. An accredited investor is there's a couple different things. Don't quote me on this. I haven't looked it up in a little bit, but I think 250,000 or 200,000 if you're single, and then maybe 250 if the combined income. But again, not quite sure those exact details. You'd have to look it up. Just accredited investor. And then, there's other things. I'm not an attorney, but I know that you can't guarantee returns. If anybody ever guarantees you a return, then run the other way, especially in real estate or any investment. Can't guarantee a return in any investment. You also need to make sure that you have a relationship with them. You can't advertise it to the public. You can't just post on a forum, hey, here's an opportunity, I'm looking for investors. That's public, that's solicitation. And so you got to qualify your audience first. And there's many more rules that you have to adhere to. But those are the high level ones that you got to pay attention to, though.
Right. So for our listeners, you definitely want to go ahead and make sure that you're not breaking any of I believe it's the SEC guidelines,
Yeah.
right? So
Yep.
you might find yourself in trouble. But so moving forward, so okay, you have your existing relationships, you have a potential deal, whether you're giving a presentation or on the phone. What are some things that you should say and what you shouldn't say? I mean, as you mentioned before, you can never say guarantee. I can guarantee this return.
Yeah.
Um,
Yeah.
so
Well, what you should say is how I always like to start out the conversation is I send them the presentation before our call, like a day before our call. And then I say at the beginning, I want to be respectful of your time, or I want to be respectful of our time together. I know I sent you the presentation beforehand. Would you like to go through it slide by slide? Would you like me to give you an overview? Or do you just have some specific questions that you'd like answered? Because what that does is they might be hook, line, sinker. They want in. But if we go through this long ass presentation, then we might be negotiating against ourselves. So why
mhm.
do that? So structure the conversation in the best way that makes sense for them, and just gets to the outcome. So that's one thing. The other thing I do is at the beginning, I want to learn about them and their investing goals. So I already mentioned that, where I ask them, what are your financial goals? And then I cater it to that. And then a tip is to listen to the words that they say. They might say, well, I want to make sure it's a conservative conservative return, and first off, I don't lose money. So then I know to focus during our conversation on how real estate's backed by a tangible asset, and it's conservative in nature because it's a proven business model because we're buying pre-existing structures. Or if they might say, well, I want conservative returns, but then I really like the upside potential in real estate. Then I focus on the value add plays of my apartment communities and what we do to increase rents, therefore increase the value of the property. So it's important to listen to the words that they use to describe the type of investing strategy that they currently employ, and then focus the conversation around that.
Right. The interesting approach. I mean, it's not a boilerplate. Okay, here's our presentation. Here's our slides, et cetera. It's, actually listening to your private investors and what they want, and it's important to have that personalization to it.
Yeah.
So we could take a little sidestep here. Obviously, a lot of what we've been talking about is, dealing, I guess, with one investor at a time. But let's say you have a deal like you have, and it's $1 million apartment building. And you have a bunch of investors that maybe are willing to put in 25,000 or 100,000, not just one investor for that full million. How do you go about pooling together money from multiple private investors?
Well, that's what I've been doing. So the first deal had 12 people. The second deal on my side had 12. I partnered on a GP side, general partnership side, so there were more investors, about 40 some in the second deal, but I brought in 12. How do you do it? Well, if you got that platform that we talked about before, that's really helpful because you're able to get a broader reach of people. And you don't mention the specific deal to them, or at least I don't. I just mention that if you want to stay in touch about investment opportunities, then let me know, and then I'll get their email, and then we'll stay in touch. And then eventually, when I do have an opportunity, if I haven't spoken to them already, just to get to know them, I'll give them a call and I'll talk, and we'll get to know each other. So it's just about having those one-off conversations that I mentioned before, but you just have more of them.
Right. So, but I mean, as far as like the structure is concerned,
The legal structure, you got a PPM, a private placement memorandum. You've got an operating agreement, and you've got a subscription agreement. You might within that have something that qualifies them as an accredited investor. So private placement memorandum basically tries to scare the pants off of them and tell them that this is they're going to lose all their money and their kids are going to be impoverished as a result of them investing in this deal for generations to come. Standard boilerplate stuff, but if an investor hasn't seen that before, then you're going to get questions about the opportunity. It's a big old long document. The operating agreement lists, if you buy the property through an LLC, then it will list out the distribution flows, what happens if I die, different things like that, similar to any operating agreement for an LLC. Then the subscription agreement will simply state what they're subscribing to, and subscribing basically investing in, and the amount that they're investing, and the accreditor, or the document that qualifies them as an accredited investor will have them fill out this form that proves that they're an accredited investor.
Right. So you visit that area once, I guess, you have the deal and you realize, okay, this particular investor, or I'm not going to be able to just use just one. So you call up, let's just say the one who says, yeah, I'm good for 100 grand, and you say, okay, John, here's the situation, and then you kind of segue into how it's going to be structured. It's not like you do that up front.
Yeah, the legal paperwork is done once we know we're moving forward with the deal, and we have it under contract, because legal paperwork can be costly. Specifically, it could cost $5,000 to $15,000 to create a private placement memorandum, a PPM. So as far as the conversation with the investor, they will sign those documents once you have once you have the property, all the due diligence done, and it's under contract, and you're ready to close, they'll go ahead and sign the documents. That way you can get that recorded, and then depending on when you decide to have them fund it, sometimes they transfer the funds 2 weeks before closing, a week before closing, a month before closing. It just depends on how you structure it.
Right. So what I'm saying is, when you first have, your conversations with the interested party, you're not going into detail as far as, okay, this is going to be a syndicate and you're going to pool your money. You're first just finding out if they're interested, how much they're willing to invest, and then when you have the deal, because in my situation with rehab, we've only had to use one investor. Now that we have other parties that are interested, but they're saying, okay, you know what? I'm in, but I'd first want to just see at 25,000. Well, 25,000, that's maybe rehab costs here in New Jersey. In which case we have to bring them on board, with other investors. So
Yes.
So I guess your approach is first just find their interest level, what they're comfortable investing in, and then once the deal's there, then you take it to the next step. Okay, here's how it's going to be structured. We're going to pool money, et cetera, et cetera.
Yeah. Yeah. Yep. I think based on my line of business, they know that they're going to be in with other investors unless they take the whole amount.
Right.
So I think it's if not explicitly stated, then it certainly is implied during our first conversation. But what I've never had anyone be surprised that there's other investors, because I bought a 250 unit apartment community on the last purchase. So they know that they either can afford it and will afford it, or they're going to put in a little bit of money.
Right. Or 50 grand is not going to get them a 250
Right.
unit.
Exactly.
Okay.
Exactly.
Gotcha. So, once you have the deal, it's funded, it's performing, etc. What do you do to manage those existing relationships? Because before you mentioned, okay, even if I don't have a deal, I'm constantly reaching out to these potential parties because I want to let them know, hey, this is why I rejected this deal, and kind of keep them in the loop. What do you do once you have, a deal that's been going on for a couple weeks or months or whatever it may be? You obviously don't want to just say, okay, see you later. And
Yeah.
so how do you manage those
So
relationships?
for the investors who do invest, they receive a monthly email from me, stating what we've done that month and how the property is performing, and then they receive a quarterly report with the property financials. So the balance sheet, the rent roll, the profit and loss statement, and any other pertinent information. If we're doing renovations, pictures, things like that. And then on a annual basis, we'll do a conference call. But then every month in my email, I have my cell phone number in there. Like, if you have any questions, then feel free to reach out, whenever. So that's how I stay in touch with the existing investors. For the investors who did not invest, I will send out updates on a probably quarterly basis usually. I'd like to do it more frequently, but I haven't. Just letting them know how the properties that I have are performing, and then telling them what I'm up to right now. And specifically what I'm up to now is we're looking at, I'd be shocked if I don't have another apartment community under contract in 3 weeks, because we're getting very close to 2 of them right now. So I keep them updated. That way they're ready to pull the trigger, and it's not, oh, who is this guy again? They've seen my emails come through, and they've reached out to me leading up to that point.
Right. A lot of information. We've covered a lot of ground here. Anything that you'd like to add on to what we've talked about?
I'd say the only other thing is to and you mentioned it earlier about the neediness. Your deals won't happen if you're needy, as you said. And the best way to transition your mindset from being needy to this is something that's going to happen, it's a good opportunity, is simply believe it in your heart that you're giving them something that they wouldn't have access to otherwise that's going to make them money, more money than what they currently are making in their other investments. And that's why you ask them, what are your financial goals? So that you can actually genuinely believe that, because once you hear their financial goals and what they've invested in the past, real estate likely will beat the heck out of whatever they're doing in already. It's just, that's why we do real estate. So genuinely believe that. And one of my favorite books, at least recently, I read a book a month, is Pitch Anything by Oren Klaff. And he talks about us being the prize. So if we think of ourselves as the prize, and money is no good if it's not investing in something, and there's a lot more money than there are deals, then we have a different mentality. We go in with respect, but we also go in with confidence, knowing that what we've got is something that will help them financially.
That was a great book. A lot of very interesting case studies.
You blew my mind, yeah.
That was a good one. I read that a few months ago. Joe, I really appreciate you being on. Before we end off, can you tell our listeners how they can get in touch with you if they are interested in investing with you, or I understand you offer some types of mentorships or any programs that you have. How can they get in touch with you to network or whatever it may be?
Yeah, well, I guess you can just Google my name, Joe Fairless, and my website will come up. And I've got my podcast on there. It's a daily podcast. I've interviewed Barbara Corcoran from Shark Tank, Robert Kiyosaki, the author of Rich Dad Poor Dad. I interviewed Oren Klaff on his book, Pitch Anything. That was a great conversation. So you can check out that daily podcast. And then I do private consulting. I have about 1 to 2 people a month that I bring on. And that's if you want to learn how to raise money and buy apartment communities. And you can check that out on my Work with Joe tab on my website.
Excellent. Joe, thanks a lot. I appreciate it. And we look forward to having you on again.
Thanks a lot, Ryan.
All right. Take care.